Okay, great. Thank you all for coming. And thank you to my co-founders, Irad and Ina, for hosting us at their beautiful home. And also to AJ for setting up our AV. My name is Jen, and I'm the CPO of Fluxon. For those of you who don't know Fluxon, we are a product development firm, and we build software products for other companies like Google, Stripe, Zapier, as well as smaller startups as well, too. Today, I'll be chatting with Yin and Vivian and Jen about their startup journeys. And to give a quick intro to our panelists today, we have Yin right here. She is a 3 times YC founder and sold her last startup to Microsoft. She's a founder of Pulley, a startup that helps companies manage their cap table and equity programs, and quickly scaled Pulley to over $1 million in revenue in less than a year. And next to her, we have Vivian. She's an MIT alum and a fellow ex-Googler. Vivian actually left Google twice to work on her startup, Yumi Who, which is a web app where users can use to build online stores, and successfully built her company to hit over $1 million in profits without raising any venture funding. And lastly, we have Jen right there, and she's a serial entrepreneur and a Y Combinator alum. She's a co-founder of Doorstead, which is a digitally driven property management company. And previously, she co-founded a top mobile app and a hardware company that designed and manufactured Bluetooth-enabled toys. So yeah, before we start, just wanted to also share that we'll be collecting questions from the audience using Dory, which is actually a Q&A app that Fluxon has built. You can use it by just scanning the QR codes that we've posted around at the event. Cool. So the first question I have for our panelists is, can you tell us a little bit about your startup and what inspired you to start it?
I can go first. So as Jen mentioned, my company's called Doorstead, and we are modernizing the long-term residential property management space. We basically, we work with owners and we guarantee the rent up front, and then we handle everything from finding a tenant to getting the property rent ready to leasing out the property and maintenance. And so if you are a renter owner, you just rent your property through our system, and we'll give you an upfront guarantee, say $3,000 a month, and we handle everything else. So we started the company in 2019, and now we're about 150 people across the globe. We service 3 states and work with thousands of owners and tenants. And what inspired me to start Doorstead was my own personal experience in the property management space and being a rental owner myself. So my parents actually have been in construction for over 30, 40 years. And I grew up learning about real estate and entrepreneurship through them. And while I was working in tech before starting Doorstead, I was helping them manage their properties on nights and weekends. And coming from a tech background, I was just shocked at how antiquated and inefficient the industry was. And for a couple years, I started trying to look for a solution to replace myself, but couldn't find one. And therefore, started thinking about how I'd build a company around a lot of the problems that I was seeing. And that's essentially, what inspired me to start Doorstead.
All right, I guess I'll go next. So I'm Vivian. I started Yumi Who. I think there's 2 main driving factors for me doing the startup. One is, I'd call it maybe vanity or envy. I come from an entrepreneurial family, so a lot of my family members do startups. My 2 older brothers, I think this was back in 2013, crypto was like starting to rise, and they're both in crypto. One created Litecoin, and they were always like in the news and all that. And I was like, oh my gosh, like that's so cool. And I think the second reason is I have a really obsessive personality. And at the time, my second child was like 10 months old, so she stopped breastfeeding. And I was asking my husband, I was like, hey, can we have a 3rd kid? And he was like, no. And I had always had a lot of different startup ideas all around like trading of goods, like common interests, because I've always kind of been like socially awkward because I've moved around a lot as a kid. And I feel like when you connect with someone on a common interest, you really, I just, so was obsessed about that idea. And then I kind of clicked for me, like instead of doing a book exchange or a gift card exchange or wedding gifts, like why not build a platform for everything? And so like that idea seemed like a really big idea. And then I was so obsessed about it, even though I hadn't written any line of code. I didn't know exactly what I was going to build, but I couldn't like concentrate at work anymore. I was at Google. So yeah, so then I was like, I need to leave Google. And my husband was like, you're crazy. And so it took me like a few months or a couple months, I think, to convince him to let me try this. And then I did.
So hi everyone, I'm Yin, and with Pulley we help founders manage their cap table and their equity. So my background is I actually dropped out of college to start my first company because I remember thinking at the time, how hard could it be to do a startup? Everyone at Stanford is doing it. Turns out that was extremely naive, and it is incredibly difficult. We ended up learning so many lessons the hard way around, pivoting a number of times. And when we finally, I think we're fortunate to actually get acquired by Microsoft, and I was thinking about what is it I want to do next, I kept coming back to this idea of like, who is it that you want to actually help? I think there's a lot of questions when we were going through like our first round as founders of like, great, what's the market you want to be and what's product do you want to build? All of those I think are really important questions. Really, like, who do you want to help, I think is also a core one, because you want to be obsessed with that user that you're actually building for, because you're just spending all your time around them. And for me, that answer was really around, I love spending time with other founders. And with Pulley, we get to do that. So ended up starting Pulley, and since then now has been a pretty fun adventure.
So I think Yin and Jen, you guys both have co-founders. Is that correct? Can you talk a little bit more about like how you found your co-founder and how do you guys work together? And afterwards, we'd love to hear more from Vivian. Like, how do you do it all by yourself?
I met my co-founder because we had actually interned at a startup like a long time ago together. So I think like the co-founder relationship is probably like more sensitive than even who your partner is if you are married or you're dating someone, because you're probably spending far more time with them. And Mark, who's my co-founder, is such a good compliment in that we think differently, but then also have, I think, a good core for like, how is it that we think about making decisions so that you're not convincing someone to make decisions in a way that I think is abstract from the way that you would think, but also pushes you on your own thinking too.
I do have a co-founder. I met Ryan, my co-founder, in college, but we don't really remember how we met, funny enough. So we met somehow. I think it was through a mutual friend. We were in the same engineering class. And throughout the years after college, we just happened to be in the similar industries, and I would help him with his startups and project, and he'll help me with mine. And so we kind of got a sense that we had, similar work styles. And so I think beyond just similar work styles and, both being really passionate about our the problems that we want to solve in our company, we also had very kind of complementary skill sets. So when we first started the company, being a real estate property tech company, there's just so many different jobs to be done, everything from growth to data science to operations, design, product, and we had a set of skill sets that we could cover everything. And that really helped us not only get the company off the ground, but even to this day, now that we're 150 people, we still kind of oversee the similar areas that we once did ourselves when we were just two people.
Yeah, maybe you can talk about your journey.
So they say that behind every successful woman is a man. So my husband is kind of like a silent co-founder. He is full-time as an ER doctor, but he also codes and he does all my finances. So whenever there's stuff I don't want to do, I'm like, hey, yeah, and you do it for me. But with that aside, I did have a co-founder for 1 year. She's also she left Google to join me on my first stint out of Google. She had a 1-year runway. We worked for a year. We became really close. But then, she ran out of money. I ran out of time. My husband gave me a 3-year deadline. And so we parted ways. I went back to Google. And then the second time around, I'm solo.
Yeah, kind of related to that, like, Vivian, you decided to bootstrap your company and not raise any money. Can you tell us more about like the decision behind that and how you're able to make that work?
Yeah, I mean, I think that, well, there's two weaknesses of mine. I think I'm really bad at pitching. And number two is my idea is really hard to pitch. And I think it's like a combination of both, that in the early days, I couldn't even really explain. I mean, even now, actually, I have a hard time explaining to people or my mom or families about what I'm actually doing. And so I was like, shoot, if I can't convince, regular people, how am I going to get funding? So I never actually went out to get funding. And also my idea is not capital intensive, right? It's just software and I'm a coder. I've been a developer, I've been a tester, I've been a PM. So I kind of like, I just did it myself. And then I think by the second time around when I left Google, we were making money already. So it's like I'm in this weird situation right now where maybe in the future, but yeah.
Okay. Yin and Jen, you guys actually decided to raise money from VCs. Like, when did you decide was a good time to raise money, for your company? And like, what did you wait for? Like, did you want to wait till you built your first prototype, or you had like, a lot of paying customers? So we'd love to hear more, about your thought behind that.
So kind of the opposite of your startup, our company is very capitally intensive. And so, very ops heavy startup, and we guarantee rent. So we did have to raise money. We felt the need to raise money really early on. So within the first 3 months of launching our startup, we went out to fundraise. However, we did not launch our company until, we felt like we had a really good sense of product market fit. And so we spent maybe 6 to 7 months kind of part-time talking to customers, refining our idea, and even writing a blog post. And that's how we got our first few customers, who read our blog post about our idea, wanted to sign up for a service. And even though we didn't have a service, and that's kind of how we knew, we had some early indication that we had product market fit. So after that blog post, we both left our positions, launched the company, and started raising money quickly after then.
I have to say, I really respect Vivian for like not raising funding, because like if you can bootstrap and own 100% of the company, that's amazing. For us, it was a case that we raised actually just like on a deck and went straight to kind of a Series A, because I was fortunate, I think, from the past experience I had where it gave us some credibility. I think the thing I try to tell founders is that funding is never free. What it enables us to do is hire really good people and build a team, basically trade off time for money. But it's not free in the sense that you take dilution with every additional round of funding that you end up taking. So for our first round of funding was mostly based on a deck. For the second round of funding that we did, it was based on the traction that you have. And I think the terms that you're able to get in every single round and how good they are just really depends on how well the company is doing. And in each future round, it becomes, I think, far less about you and the pitch and more about like, what do the numbers look like? And being able to just look at a spreadsheet and see like, is the company actually doing well at scale too?
One thing that's really interesting is the three of you guys have in common is you guys were all accepted into the YC, batch. And I think Uni did it 3 times. Jen, you were in it, and then Vivian, you were accepted and you decided not to join. Would love to hear kind of like, I guess your experiences there, and then Jen, like your decision why not to join. And it'd be great to also just poll like the audience here, like how many of you are startup founders? Let's see the mix of the crowd. Great. And then how many of you are thinking of starting a company? Cool. Okay. Just look to hear, because I think there's a lot of options. It's like you go to YC, you can do VC funding, you could bootstrap. So I think a lot of this stuff could be really interesting to hear the audience.
So I think the experience I had first time as a founder, after I dropped out of college to do YC, was really different than the second and third time. First time, it's like you're drinking from a fire hose. There's so much information. And I think the benefit that you get of something like YC, which almost just creates a program around startup formation, is that you don't have to make the basic mistakes. Like, how do I incorporate a fund company? I don't know. Do I need to get a lawyer? Do I need an accountant? These are just the basic questions I have. And it's great, you can go and talk to a YC partner because they have a handbook on here's all the things that's been done. What I think that YC is not going to help you with, and because if you just look at the numbers, most companies fail. That's the downside of it. But if you just look at the numbers, YC can't help you get to product market fit, but they can help you think about what are some of the problems that your startup may have, based on just pattern recognition of talking with hundreds, if not thousands of founders by this point. The reason I decided to do actually YC a third time around was not so much for the advice on like how do you form a company, some of the basics that's there, but more really for distribution. Like for Pulley, it's the case that our customers are startups. We did the math. It was like, great, YC takes 7% of your company, which is not a small amount of equity. But if you're able to accelerate the traction that you get early on and get a lot of YC companies on board as users, then that was beneficial for us.
I think similarly to what you said, I think YC can be more beneficial to certain types of startups. Definitely if your, customers are founders, YC is amazing because you already have thousands of founders, willing to try your product. I went through YC for a hardware company, so had a slightly different experience. But I guess to start off, I do think that YC, I really enjoyed my time there. I thought that it gave me a really good foundation of like how to start a company, how to pitch, how to, what metrics to look at when you're an early startup. Although because I was a hardware company, we have 3 months to show traction and then to, get great metrics. And then you have this like pitch at the last day. And as a hardware company, everyone was like, oh, I have a bunch of customers. And we're like, oh, we're still building our product. So I thought that like, maybe for my type of company that wasn't as useful, beneficial, but I think overall, I got so much out of YC and learned so much.
I think for me, I actually applied to YC 3 times, or is it 4? I forget. I think we got rejected 3 times, and then this was like my first stint out of Google, and then the 4th time, it was like a last minute decision. Like I was like, oh, it's due today. And then I started writing the application at like 8 or 9 p.m. And then I actually submitted the application like past midnight. So the first 3 times I didn't get an interview, nothing. And I was like so disappointed because at first I thought it was because I was a solo founder, but then we applied again when I had a co-founder and still nothing. And then so the second time around was when I just left Google again, and we were profitable and showing like good numbers, and so we got to interview. I was like so excited because I felt like I overcame something, and then I had the interview, and like that was exhilarating, and I thought I like did horribly, but I got in. And then I thought for a long time. It was actually a huge distraction for me because I was like, should I do it? Should I not? There were many factors for me. Like one big factor is we're not a B2B company, and I was like, that's like a big pull for YC. Number 2 is, we were a little bit further along, like we were profitable already. So like the money factor wasn't gonna play into it for me. The cohorts were bigger. It was all virtual during COVID, and that was like a huge thing. I was like, I really want to be in person and do the dinners in person. And then I think lastly, I was like, well, are we going to be ready for like a TechCrunch press release, whatever, come August? And I was like, I didn't think that we would be ready for that. I didn't know. And I think that's a major thing. I think like later on when we are ready, we're still not ready. I'm so slow. When we are ready, like it might be a good time to do something like that. But I think one more thing is like optionality. I felt like if I hopped onto this train, then it's like for sure the VC route, and otherwise I have more control. Yeah. So I haven't made that decision yet to hop on.
Jen, you actually recently closed a round. Congratulations. Could you talk a little bit more about your experience raising in the current economic environment? I can only imagine it's pretty hard right now to close a round in fundraising. And any tips you can offer to people in the audience?
Yeah, sure. So we probably had one of the worst timing in going out for a Series B raise. We went out to our first few meetings with investors, the week that the stock market plummeted early in 2022. And so what might have been, 2 to 3 months raise was, took about 9 months or so. I think what really helped us pull through in the end was seeing the writing on the wall really early on. Within our first few meetings with investors, we saw that there was something strange and different, rather than really focusing on our growth metrics, they're really like digging into unit economics and, a path to profitability. And so we got that signal early on. We kind of adjusted our pitch, and we also did a 180 with our company, rather than focus on growth at all costs. We were really focusing on profitable growth, and we really showed progress towards our unit economic goals. And I think that really helped us in the end, with our meetings with investors later on in the year. They really saw that progress, and that really helped us close our rounds. And so we did close our Series B round last quarter, and we just announced it 2 weeks ago. So some advice I would give if you're going out to raise funding right now, I think staying lean is really, really important, because fundraising is probably going to take longer than before and maybe even longer than you expect. And so that's something that we did as well. We stopped hiring. We did try to trim down as much as possible. And I think if you can show a clear path to profitability, that will go a long way with investors.
Yeah, and it's really interesting. In like a previous conversation we just had, you said actually now you think was a good time to start a company, and just curious to hear why you think now is a good time to start a company.
Yeah, I would say like generally, I think far more people should start a company. Our business sells to startups, but more in the sense of I think the world is also just a better place if you have a lot of people that are trying to push the needle forward on what's possible versus getting an incremental 0.001% improvement on search and adding to that. I think now is actually a really good time because there's a couple things I think that's shifted. One is that if you look back at 2021, when funding was really easy, that's the pro, but then the con is like, I think there was actually a lot of irrational decision making. You are just trying to grow at all costs, even if the unit economics may not make any sense. And now we're seeing that correction on the public markets where companies have gone public in 2022 are now down like 50, 60, 70, 80% from their all-time highs. So I think if you're a founder that's also thinking about building for the long term, you're going to be fine. And I think if you're thinking about building for the long term, now is a great time to get started because now you can convince that friend that you've been wanting to work with for a long time to leave their cozy job at a FANG and was like, hey, why not take that leap of faith and go and build something that could be impactful? I think another reason for why now is also like a really good time is that you can separate some of the signal from the noise. Like, are you asking yourself the question of like, am I actually starting the company because I want to versus like, it's so cool to be a founder? I think starting a company is actually really easy. Building a successful company is like far harder for the long term. So like being really clear with yourself on like, hey, do I want to do this given how hard it is? And maybe when the initial step is that much harder, I think you're more likely to stick it out for the long term too.
It sounds like for many startups, and we also experience the same thing here at Fluxon, like we've actually built some SaaS products of our own, that it's actually not a challenge to find your like first 5 paying customers, but it is a challenge to get your first 50 to 100 paying customers. So we'd love to hear from the three of you, like how did you guys get your first cohort of customers? Did you hire salespeople or a sales team to do it, or did you just kind of do it on your own?
So my company, we're targeting micro SaaS, or basically consumers, just like mom and pops, single person sellers. So for me, I remember in the early days, I joined a whole bunch of Facebook groups, and I was spamming them with links, with collage links. And I remember getting the first, I think 300 users really fast. And at the time, I didn't know what that meant. I talked to a friend advisor. He's like, oh, that means you're onto something. But yeah, so that's how I did early days. I just, a lot of manual work in Facebook groups for me.
Yeah, I'd echo doing the things that don't scale. For us, it was a case we at YC did what was the Collison brother install. So Patrick and John are the Collison are the founders at Stripe, and what they did for Stripe in the early days is that what most people would do is great, we have a new product, are you interested in trying it? And then the other person would be okay, cool, I'll try it, but then no response. They would literally find you if you were a product that needed payment. It was let me just sit down next to you, install it for you so that there is zero friction to getting started. So I would sit down next to the founders, help them create an account, walk through their questions. Because I think in the early days, a lot of times they're also just using the product because they trust you, and they're buying it mostly because you're the expert. After we got our first 100 or so users, and most of it we gave away for free just to get their feedback on it, we took the step of actually charging people, which I remember thinking then was like, man, this is so scary. Are people actually going to pay for it? Would highly encourage people to try to get people to pay for it earlier rather than later, because then you can actually tell, do you have a hobby or do you have a company that is actually something that is going to be eventually profitable. And then what we did do early on is, like, I think there's so many things that you probably don't know. My background is product and engineering, so I was like, man, what does sales even look like? So I actually got a sales coach that helped us go through the motions. And it's really, like, sales, I think, is actually just a process that's very repetitive too. It's not, it's more of a, I think, a repeat thing than, like, every single sale is very unique. So then they told us, like, great, here's a playbook that you can then repeat. And then we ended up hiring, like, more salespeople on the team, and then hire, like, a head of sales, and then scaled from there too.
I think what really helped us get our first 3 customers was refining, our tagline and kind of that marketing pitch early on. We got customers, not like really early customers, through the blog post that I mentioned before, but we also used paid acquisition. And through paid acquisition, we could really see what people, liked in terms of, what we were pitching. And surprisingly, we had one TechCrunch article, and through that one TechCrunch article, and after refining our pitch, we had about 600 people sign up within a week, and all throughout the U.S. And so I think really, understanding the product and what people want early on was really helpful.
I think, like, one other thing I'll add is, like, I think there's no magic bullet to how do you grow, because it gets harder, I think, at each stage. Like, once you get your first 5, great, now you got to find your first 100, now you got to find your first 1,000, 2,000, etc. And the things that I think work from the 0 to 1 probably doesn't scale from the 1 to 10. So what we've learned is, like, probably throw more darts at the dartboard and just see what sticks. And the story around Airbnb is that they launched like 10 different times because each launch didn't actually get them any customers, but eventually something also stuck.
Well, I'm going to ask one last question before we open up for Q&A. Can you just share any advice, any general advice you have for aspiring entrepreneurs who are looking to start their own companies?
I think one thing that I wish I would give myself advice when I was younger and more of an aspiring entrepreneur is just really to trust your own gut and trust your own instincts. Early on, I was very doubtful about the ideas that I had and kind of latched on more to other people and their advice. So, take advice with a grain of salt. Take our advice with a grain of salt, and really trust what you know, because your perspective is going to be unique, and that's kind of what's going to make your company, your startup, stand out.
I think one advice I would give is to just be really persistent. In the early days, related to that last question about growing users, one of the Facebook groups I was targeting had 8,000 members, which was a lot of people, and I got blocked because people were reporting me as spamming them, and I was so scared. I was like, shit, how am I how am I gonna grow into this market if I got banned from this group? And then I kind of clawed my way back. I apologized to the admins. I was like, I'm really sorry, I'm never gonna do that again. And then they let me back in, and then I was really careful not to do it the same way. And then there's hardships that come along the way. One of the company's sellers that we're targeting, they sent us a legal letter, cease and desist letter. That was really tough. But I think everything that comes along, there's something you learn from it. From that, I got a lawyer. I learned about how we can protect ourselves, kind of in a Pinteresty way, because they have content also. So user generated content, and how to make it so that we're legally protected.
I would very much echo what both of them have said, and I'd say it's especially the part of trust your own instincts. You will know far more about your company than any investor, any advisor, anyone that you're going to for advice, because you're the one that's thinking about the company 24/7. The context that you have should be far greater. That's why you're the founder. And I'd say like also just be ambitious. I think especially if you're starting a company, like it's hard to build any company, so you might as well go and try to build something that tackles a massive market, because it's equally difficult as a journey too.
Thank you. I'm going to take some questions from Dory, because these are questions from the audience. What were some of the most difficult challenges you had to overcome during your journey?
I think for me, this like a lot of the challenges probably comes down to like people, and for my first company, like we had 3 co-founders and it ended up being 2 co-founders, so like please pick your co-founders really well. And now we're in the stage of also like scaling our company, and at every stage it feels like you're really stretched to like what you may have never done before. I've never hired like a head of marketing, a head of engineering. Great. So like, how do you figure out what really good looks like? And that's where I think it's really helpful to also have like a network of people around you that can give you good advice and filter that based on what you think applies to.
I can't really think of only one difficult challenge, because I feel like the entire journey, every day is quite challenging. But similar to what you said, Yen, I think what really motivates me is that every day is different, and there's so many challenges to overcome, and those challenges change so much from being a pre-market fit to being a company of 10 to 10 to 100 and 100 and beyond. So I think really embracing the change, embracing the challenge, and being ambitious as well has really helped my co-founder and I get to this point.
For me, I can think of 2 things. One is, for the longest time we didn't charge money. I think like I was too scared to charge money. I was like, it's not the right time. People aren't going to pay for it. We're still trying to grow. It's going to drive people away. And I tell the story. I was just telling Yen today, like that. The 3 years that I left the first time around, we didn't make any money. I went back to Google. I felt like a failure. And then I tell people that like we weren't making money. And then my son, who's 11, he's like, "Mommy, like, how do you make money if you don't charge money?" And I was like, so that's very true. So I would say, like, if I were to do it again, I would have started charging money earlier. It really weeds out the people. I mean, I read that, but like it didn't really sink in that it weeds out the people who will actually care and give you advice on what they actually want. And the second thing is what I'm trying to figure out right now is up until now, it's been organic or like manual, non-scalable growth. And I'm right now experimenting with how to market. And I hope I will come to the realization maybe a couple months from now that, oh my gosh, like I should have done that 3 years ago. But I don't know. I haven't figured it out yet, so I'm not sure.
I guess it's a little bit more directed towards you, Vivian. They said for the single founders, like, how did you keep yourself accountable and structure your days to make sure you're still making progress during those early exploration days?
I'm a workaholic, so like I'm just like always working. But I think at some points of my journey, I had like an accountability partner. That was really good, where we just checked in with each other. He was also a solo founder. And gosh, like I don't know. I just work, and then I try to divide up coding versus marketing, and I think that also helps. Like I always make sure like every day I spend some time with the users, and every day I spend time coding, and I pretty much deploy stuff to the site every day. So. And then recently I started a news section on my site. So it would feel bad if I have nothing to put in there. So like I have to build stuff to put in there. Yeah.
As a female founder, what are some of the differences or biases that you've observed throughout your journey that your non-female counterparts may not have needed to overcome?
I'm actually really curious what you guys would say to that.
I was gonna ask you the same thing, or say the same thing.
I think that what I would say may be actually a little bit atypical, which is I think the gender component for me has probably not been a huge factor, because in reality our customers don't even know what my gender is. I would say in some ways, like, being a founder and creating a company is the most egalitarian you can get, because the question your customers have is like, does this solve my problem? great. If it does, I'll pay you money. Versus like if you're at a big organization and there's like layers of management above you have to think about, how do I manage up? How do I please my manager so I can like get to the next level? And I think like one of the skill sets that you're forced to just figure out, I think as a founder, is like, does this work? Does it not? Let me keep trying. I do think maybe at times, and this could be like unpopular advice, is like, great, when you are fundraising, there is a way to present your idea that, going back to like the be ambitious comment, like don't hinder your own success. Like, do present how big this market could be versus where you are today, because all investors are betting on like the future success that you could have. But I think all of that is also teachable and trainable too.
Yeah, for me, I mean, like I've, been an engineer or been in tech like my whole life. MIT was also like, very male dominated. I never really, until I did the startup actually, like thought about the gender component. And I haven't fundraised yet, so I don't actually know, but I do have a fear. Like, I'm like, oh, it's so easy for like my brothers or like for men to just go out and fundraise with an idea. But I do think that if and when the time comes that I need to fundraise, it'll be because there's a reason to fundraise and I have a product. And I think that will drive like the confidence and not necessarily like, and then at that point, it'll probably be advantageous that I'm a woman, because then, the investors can say that, oh, hey, there's a woman, portfolio or whatever in my portfolio.
I think the stat is like public companies that are run by a female CEO actually outperform the standard. And it's the case that I think if you even look at venture-backed companies, maybe as a whole, like the ones that are started by women tend to outperform, because you're already doing something that's probably a little bit atypical. So you're probably only doing it because you are likely better than the rest too.
I think personally, I haven't really felt like my gender has like inhibited me from doing what I want. I actually sometimes feel like, we might be looked at as like the underdog. And so, we have the opportunity to kind of like impress and go above and beyond like people's expectations. That being said, I've always had a male co-founder. So I think maybe my view of like fundraising might be a little bit different than all female co-founders.
Okay, this might be our last question. Yeah, I think this is going to be our last question. For the rest of the questions here, we'll add our panelists as moderators on Dory, and we'll ask them to answer them. So you guys can get answers to all the questions. So even after the event, if you guys want to post questions on Dory, please do so, and we'll have our panelists answer the questions for you. Or feel free to also just ask the panelists in person if you want after the event. Okay, so last question. Have any of you run a previous company that has failed? If so, why did they fail, and what did you do differently this time around?
Yes, two of my past companies have failed, and I actually wrote a thread for like, how do you actually shut down a company? Because I think maybe once you've done it once, it's not as scary the second time around. And it's actually also far more common than I think what most people expect. Like, the stats, which is I think 90+% of startups fail. And you could say like maybe not achieving the full potential of the company is also a failure. For me, there's like a couple, and I think there's like different levels of failure. One that I'll share is like, we did a same-day laundry delivery startup. So this was around the time that you had Uber, you had DoorDash, and you had like HomeJoy, all these startups that were online to offline. It was like, man, what's great? We hate doing laundry as college students. Let's go do a startup around this. So you would push a button. My co-founder and I would come up, pick up your laundry, and then literally like same day work with a laundromat and get it returned. But what we realized was like, even though the unit economics on this business were pretty good, we just hated this business. So like, doing laundry is not something you're super excited about getting up and doing. So I think it was actually a case where it was like, it didn't fail because it was a bad core business, but we just weren't excited about what we were building. And in the next like 5-10 years, like the future of opening all these laundromats and scaling that was not something we were looking forward to.
I've also had two startups that failed previously, and the first one, we were building a mobile game. I think the main reason our startup failed, or we no longer decided to continue, was really co-founder issues. So I had two other co-founders, they never worked together before. I was like the common link between them. And so big lesson learned there, make sure you pick your co-founders really well, and that if you have more than one, that all three of you can work harmoniously together. Second startup, another big lesson learned is, we raised money and went through YC before finding product market fit. And so, that was a big lesson that I took to my current startup, and, really trying to take time, talk to customers, find something that people want and pay for before, launching the company and raising money.
So I have a question around this. It's like, what is failure, right? Like, the first time I did it for 3 years and then I left, you could consider that a failure. And it could have just died down, right? But I left the company, I left the website running to like have a back door because I knew there was something there, just couldn't figure it out yet. But I mean, even now, like my company could shut down and it could be a failure. But I feel like, the definition, for me is, I'm still not sure, like what is success, right? Is like $1 billion company success, or is like profitable, success? But that's just,
Cool. That is the end of our session. And we have a lot of food, so please eat some of our food. Again, if you have any questions, please feel free to come to any of our panelists. And also feel free to talk to any of us too at Fluxon too. We're all co-founders here too. Thank you all for coming.